It's a beautiful day in this neighborhood, a beautiful day for a neighbor. Would you be mine? Could you be mine? It's a neighborly day in this beauty wood, a neighborly day for a beauty. Would you be mine? Could you be mine? I have always wanted to have a neighbor just like you.
Hello, and welcome to episode 12 of
Mo Money,
the investing show for millennials by millennial. We're teaching you how to get rich later, starting now. I'm MC Mo, making cash Mo. 3 months and running. We got another fantastic episode in store for you, so let's get this show on the road with
the Mo Money Market Update.
The rally in the market continued again this week, hitting levels that haven't been seen since December 7th, 2015, which was the last day of highs for the market. Pretty much just started shitting itself for the next 3 months. So this is pretty exciting. With the first quarter in the books, companies have and will begin to start reporting earnings. With a fear of the global slowdown, the street is nervous and pessimistic about the earnings reports and earnings seasons, which is always a volatile time for stocks in general. Now, JP Morgan was one of the big names to already have reported this week. And although numbers were down year over year, the numbers did beat expectation, leading people to believe that things were not as bad as previously believed. Now, in global news, there has been an agreement for a cease production of oil agreed upon between Russia and Saudi Arabia. Next meeting of OPEC and others will be April 17th. Will they really agree to cut production? Most likely not, but crazier things have happened, like Kobe Bryant scoring 60 points in his last game ever and the game winner. Goddamn! Anyways, I'll keep you posted on that meeting. So before we get to this week's topic, let me first start off by saying Happy Emancipation Day weekend, the 151st anniversary of the signing of the Emancipation Proclamation by President Abraham Lincoln, which freed 3,000 slaves in D.C., which is celebrated the weekday closest to April 16th. Now, you may wonder, why are you bringing this up? Because it's fucking important to know history, and I'm trying to teach you things here. Also, because it means the final day to file your income taxes has been pushed back to Monday, April 18th. Now, usually income tax day falls on April 15th, which this year falls on a Friday. This Friday is the weekday closest to Emancipation Day, meaning the IRS will not be working that day, which gives you a whole extra 3 days to file your tax returns and get your shit together. As by now, I'm sure you can guess this week's topic, taxes and how they affect your stocks. Now, I'm not going to tell you how to do your taxes because that's what TurboTax and accountants are for, and I am neither of those. When you think of tough gangs, you may think of the Mafia, Crips and Bloods, ISIS, super intimidating guys who are willing to do anything, especially when it comes to getting their money. But I'm here to tell you they are not the toughest or the most savage gang out there. Not even close. Toughest, most money-hungry gang in the world is located only a stone's throw away from the White House. The name of that gang is the IRS. The IRS, the Internal Revenue Service. Ones who come knocking this time of year looking for your taxes. They will do whatever it takes to get it from you. Relentless calls, seizing your paychecks and your assets. And if you think that's not very intimidating, well, just remember who they have as enforcers. Yeah, the Corleone family had Luca Brasi, but the IRS has an entire army and unlimited power. You think I'm crazy? You think I'm over-exaggerating a little bit? You may be right, but you think those cops who strangled and killed Eric Gardner really cared that he was selling untaxed cigarettes because it was illegal? No, they cared because the government wasn't getting its money. Uncle Sam wants his money. He doesn't care what you're doing, just as long as he gets to wet his beak. Remember, always pay your taxes, whether your money is legal or not, because Al Capone finally got brought down, not on murder and racketeering charges, but for tax evasion. Now that we've got that covered, let's talk about taxes and your stocks. Any increase in your investment is called a capital gain. First type of tax that will be applied is for short-term capital gains. This is when you buy and sell a stock within 1 calendar year. Short-term capital gains will be taxed at your current income tax rate, 15%, 25%, 28%, or whatever bracket you're in. The second type is long-term capital gains for investments that you have owned for longer than 1 calendar year. They receive a capital gains tax discount. Here's how it breaks down. For those in the 10 and 15% tax bracket, they pay 0% on long-term capital gains. For those in between the 25% and the 35%, they get a reduced rate of 15% tax on their long-term capital gain. Finally, those in the 39% tax bracket pay a reduced rate of 20% on their long-term capital gains. So as you can see, it pays off to hold on to your investments longer. Also, you have to take into consideration dividends. Now, there are two types of dividends: regular dividends and qualified dividends. Regular dividends are taxed as ordinary income in the year that they are received, while qualified dividends can be taxed at 20, 10, or even 0%. If you own a stock that pays you a dividend, find out if it is a regular dividend or a qualified dividend. Now, say that you own a bond. There are three different types of bonds. There's federal treasury bonds, there's corporate bonds, and there's municipal bonds. Now, the interest accrued on treasury bonds are taxed at a federal level. Corporate bonds are taxed as normal income on all levels. And then there's municipal bonds. Municipal bonds are 100% tax-free at a federal, state, and local level if purchased from your state of residence, which makes municipal bonds a very attractive investment. But most of my viewers are millennials, you're young, so even though the returns on stocks are taxable, in the end, the returns have the potential to be much higher. Now, there's a way to decrease your taxable burden, and that is through a tax write-off. You heard all those times, those big douchey business guys saying,
it's fine. We'll just use it as a tax write-off.
Or Jay-Z, who said, I'm taking wages down in Vegas just in case Tyson have a major night off. That's clean money, the tax write-off. Now, you can be a douchey corporate guy or even a famous rapper. How? Tax write-offs by your stocks. Your taxable capital gains can be offset by your capital losses. Now, nobody likes to take a loss, but in the end, it can really help relieve a little bit of that taxable burden. Now, you must first categorize your gains and losses into short-term and long-term. Now, capital losses and gains can only be paired against its corresponding time frame. So an example that I found on Investopedia. Now, say in 1 year you have 10,000 in gains and 30,000 in losses. So you offset the 10,000 in gains with 10,000 in losses, meaning you don't have to pay any taxes on that $10,000 gain, leaving you with $20,000 in losses. You can use an additional 3,000 of that 20,000 to offset your taxable income, leaving you with $17,000 in total losses. You can now carry that 17,000 over into the following years, using them to offset future capital gains, but only in $3,000 increments until the loss is all used up. Let's say you've used up $6,000 of the original $17,000, meaning you have $11,000 left of losses to use. If you realize a $20,000 capital gains in 1 year, you can use the remaining $11,000 from previous losses to offset that $20,000, leaving you with $9,000 taxable capital gains. Like I said, sometimes it pays to recognize a loss. Now, that's great and all, but just remember the IRS is very smart, and they're very hard to fool, which is why they implemented a rule called the wash sale rule to prevent people from selling stocks one day, claiming them as a loss on their tax return, and buying them back the next day. This prevents people from selling a stock for a loss and buying it back for 30 days. So if you bought Apple at $130, then you're filing your taxes and you sell it at a loss of $100 a share to offset capital gains from another stock on your taxes, you are forbidden from buying Apple stock for 30 days. If the IRS finds out that you did, that loss is forbidden, so no funny business, got it? Now, like I said, the IRS is one bad motherfucker. John Koskinen is the current Don Dada, kingpin, the boss. He runs the fucking show, and he gets his money to fund this country. So don't be stupid like Iggy Azalea, Lauryn Hill, Wesley Snipes, Willie Nelson, Nicolas Cage, Lindsay Lohan, all who thought they could get away somehow with not paying taxes. They learned their lesson. Just remember that in life there are two guarantees: death and taxes. And Cleveland sports will probably leave you feeling hollow and disappointment on the inside. The way I see it, taxes are nothing more than a membership fee to the world's best country club ever, the United States of America. Your taxes help build roads, pay for everyone to go to school, help feed the poor, all other great kinds of social programs. So make sure you file your taxes. Don't hide anything from the IRS, because they will find out. And remember, you're a club member of the greatest country in the world, United States of America. Now, I appreciate everyone watching another episode of Mo Money. As always, make sure to like, comment, subscribe, and share. Follow me on Twitter, like me on Facebook. Have a fantastic weekend. Thank you, everyone, for supporting me for the past 3 months. I will see you next Friday.
Mo Money signing out.